Well, good morning, CIS clients. It's Jim Cranton here. Still struggling with a bit of a cold. I wouldn't call it H1N1, but it's been rough. And speaking of rough, the market the last few days, as everyone knows, has been a challenging place to be. Now, I believe if you go back to the archives of the CIS commentary videos, you'll see that about a week or 10 days ago, I did suggest that the market was frisky, and a pullback is not surprising under those circumstances. So what we're seeing here is just part of the normal to and fro of the stock market. Nothing to worry about. Having said that, I wouldn't be surprised if we see 11,000 before we see 12,000. So have cash on hand, keep your powder dry, and be ready to take advantage of buying opportunities. Now, what I'm going to do just over the next couple minutes that we have here today, because I know the market is going to open soon and we have to get to work, I want to review CIS's handling of the Teck.B file. Now, we had one of our best analysts working on this file, and we purchased the stock. I just consult the records here. And we do keep excellent records here at CIS. If you ever need to follow up on your portfolio, I've got the information right here. It's all right here. So anyway, purchased Teck.B, took up the initial position in September 2008. Yeah, that was, if you recall, just before the big crash. The market almost immediately upon purchase of Teck fell, I don't know, 60%. But you know what? Here at CIS, we do not sell stocks that are down. Some people refer to those, some other analysts, and even reputable firms will refer to those as the losers. Well, at CIS, we don't buy losers, we buy winners. Why do we buy winners? Because we are winners. And you're a winner too. So anyway, we held on to this stock through thick and thin, through the worst of the crash, and sure enough, January 5th, 2010, we sold it. $39.98 we sold it. So what I'm telling you is we made $100 over a year and a half, which is not bad on a $40,000 investment. But the good news is we didn't lose any money. More importantly, our clients did not lose any money. But here's where it gets interesting, okay? And of course, no stop losses, please. All right. I think Teck went down to $3. I think if you had placed a stop loss, it would have kicked in at some point. But we didn't do that because that's not how we work here. We sold it January 5th. Guess what? Now, we took a lot of flack on the street for that because it then went up to $42 or something like that. And people said, CIS sucks. Well, hang on. January 22nd, lo and behold, Teck.B, we bought it, $38.45. You think that's good? About 20 minutes later, we sold it, $39.47. You think that's good? A few hours later, we bought it, $38.45. And we are now proudly holding Teck.B at $38.45. So what have we learned? This is just a little kind of example of what we do here at CIS with your money and with our clients' money. Now, what have we learned? We've learned that we don't know if the stock's going up or going down. So if we can make $100, what do we do, class? We make $100 because the stock could go up or it could go down. And Teck.B has done both, and every stock does both. So when it goes down, what do you do, class? You buy. Very good. And when it goes up, what do? You sell, of course. So that's the lesson for today. I thought it was a good illustration of some of our principles. I also should say it's a good demonstration of the diversification principle because Teck, as a mining stock, We don't have in our portfolio too many of those, so we like to have some mining exposure. And you know, sooner or later, one of these days, the mining stocks will do well, and if and when they do, we hope to take advantage of that and profit from that. And when I say we, of course, I mean you. Thank you. Happy trading, and we'll talk to you soon. Bye.